Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on natural gas, and we'll look at UNG on the daily weekly time frame. So the natural gas bulls, nice reaction to the inventory report, and they really needed it, and that was to keep the daily higher low pattern intact. So here was our low of consolidation. You can see we're stair-stepping on the way up. Every time we pull back and the bulls say, okay, we're done pulling back, that's a new support level. So we have support levels all the way up here, and the most recent one was 3.12.1, 3.121. And the bulls needed to hold that level. Otherwise, if we break it, we then shift momentum, and then we start looking for lower highs and lower lows. The bulls dropped down to 3.132, holding that level just barely, and seeing a bullish reversal candlestick Wednesday. So knowing that we needed a bullish reversal or a bullish reaction to the inventory report to confirm this reversal candlestick, and that's exactly what the bulls gave us, and to close at the high of the day, which is an ideal day on Thursday for these bulls. So resistance from here, I'm looking up at 3.268 and then 3.293, the highs of Tuesday and Monday, and watching this weekly time frame, which does have a bit of an upper wick of profit taking, and we had a bearish reversal, spinning top. What these three candlesticks tell me on the weekly time frame is indecision. An indecision after a bounce does favor the bears, but we have not confirmed any of these bearish reversal candlesticks yet. If we were to lose on the daily time frame, the higher low pattern that I just highlighted, if we were to pull back and break that 3.121 level, then we would confirm the bearish reversal candlesticks on the weekly time frame. So that's why that level is so important on multiple time frames. And if the bulls do break the recent high of 3.347, they will be showing full control and continuation to the upside. So that puts UNG holding key middle Bollinger Band daily support 3 days in a row and seeing some nice follow through. We've got resistance here. There's a gap at 766, which we actually did fill, but I'm looking at resistance of 775 and 784. The red flag for the bulls here would be a loss of 745, breaking the higher low pattern. You can see it's a really nice strong channel to the upside on this bounce. The weekly time frame showing that indecision 2 of the past 3 weeks, still maintaining higher lows on the weekly time frame. A break of those higher lows would be a bit of a red flag. So if we were to break 745, again, that would be that same higher low pattern break on the daily, and it would break the higher low pattern on the weekly as well. So I would be a bit cautious on natural gas. And really, if you are a longer term bull, you can be using that 3.121 level. But I would be cautious if we pull up and form a lower high and then head back down here towards this support. And that's just because where we are coming from on the weekly time frame. After that all-out dump that we saw on natural gas, we have made a very significant recovery. We recovered about 60% of that dump back to the upside, and I would be looking for a potential lower high to form. And actually right now, just stood out to me as I'm doing this, need to keep an eye on a potential bearish reversal head and shoulders pattern. The left shoulder, the head, the right shoulder, if we were to pull back from here, we have our neckline both at this double low of support down here, and that is down at 2731 and then on down to 2737. So this is a potential bearish reversal head and shoulders pattern. Again, I would not be making a trade based on this pattern at this point. It's just something that I would be keeping an eye on. And if we would start to pull back from our temporary top, we would be looking down at those must-hold levels. But this is a bit concerning for the weekly bulls. It would only be the odds of this playing out would increase significantly if we break 3.121. So that is the level. I've said it plenty of times in this video to burn it into our brains here. That's what we're watching in the short term for the bulls to maintain, and we do have momentum as we head into next week with the strong close at the high of the day. So ideal scenario for the bulls next week, if they were truly very strong, would be to break 3347, negate that potential bearish reversal, head and shoulders pattern, and keep the bulls in full control of the daily time frame. So we'll keep an eye on it, and we'll certainly be watching that 3.121 level. I appreciate you watching, and I hope you have a great rest of your weekend.